Hi guys, in today's lesson we are going to be going over support and resistance and how we can actually trade this area. So of course you're going to remember this from the last episode, and if you don't, well, please go back and have a look at it because it's going to make a lot more sense if you've listened and watched the first episode and taken some notes. So how would I actually go about trading this? So let me zoom in here. So we're in the 15 minutes right now. Well, it's quite simple, guys. If the market is going to come up and hit here, we're reasonably thinking it is going to come down and hit the bottom. And it comes up and hits the top, hits the bottom, comes up, hit the top, hit the bottom, and so on and so forth. So I think you know where I'll be going with this. So let's say we're getting it live, right? And this is when we start to think, oh, look, it's coming down to the same area, and oh, we've hit a double bottom right here at that first double bottom. That's what I'm looking for right now. Well, what I would be doing is straight away hopping in right here, putting my stop loss roughly under wherever the last breakout has been. Usually it's going to be a small one, something like this, and we can go over another example, so don't worry. Put my stop loss just under here, and then I am going to wait for the top. Now, that is a 2.46 risk to reward ratio. So obviously you were risking that 1%, and we're looking for a 2.46. Now, that's going to vary. Now, obviously we know that it comes down, touches the line, hence why we had it underneath here. We have it here just in case it wicks through. Like it does up here, we just want to make sure that it wicks through here. And again, within half an hour, we've got 1, 2, 3. We made it. Now, obviously, with this one, we wouldn't want to hop in because we want this candlestick to be as close to this line as possible. There's no point hopping in right here. And I'll show you why. Because one, we're going to have our stop loss roughly up here. The latest breakout, just like I said down here, we're going to have it right here. And then we go and we say it's going to touch down here. Now that's a 0.76 risk to reward ratio. Because obviously this is going to represent 1%. We're always going to trade with 1%. And now we are aiming for less than we're actually risking. Now we know it does go all the way down, right? It does go all the way down. But if we're risking 1%, we never want to aim for anything lower than 1%. Why would we? We always want to aim for at least 2%. That's what I'm really going for. Well, you can go for 1% on this one. So whatever you risk, you really want to make sure that you are going to get at least what you risk to break even. So again, look, this one's come all the way to the bottom, just like it has over here. We put our stop loss right underneath the latest breakout, which coincidentally, look, is right in the exact same spot. And now, again, we are aiming for up here, a 2.3 risk to reward. And now it comes out in half an hour, we've made it. Now, this isn't always going to work, guys. This is something that I really need to stress to you. It might not do it, right? No one has 100% win ratio. No one does. There's no one in my proprietary trading firm that has 100%. For example, this one again, we wouldn't really hop in because look how far away it is from the line, guys. It's not really good. Even if we did, actually, I apologize. It's fine. Because obviously the candlestick is closing up here. I was getting slightly confused with obviously the red candlesticks which close underneath, green candlesticks close on the top. So we would have a really good risk to reward at a 225. That's looking good. But again, we know that it plays around for a while here and it never really touches the bottom. It just starts messing around until way later and it comes down and eventually we have that hit right there. So within this area, we've got 3 wins, right? 3 wins, 2.5, 2.5, and then, your other 2 or whatever it was. In fact, actually, no, I thought we weren't going to hop in that trade because it's a 0.7. So we've got 2 wins at 2.25 each. That means within the space of from where it started, we entered 3rd of May at 11 to where it hit down here at the 3rd of May at 9:15. Within a day, you're making roughly 4.5%. Roughly somewhere around there, which is absolutely amazing, and that's what we look for. However, you know, it will happen sometimes where we can see this candlestick, it's come down, it comes all the way to the top, right? But we get that one, we get that touch, and look, it's hit down here. And usually what I've told you guys is when it does come down and it hits it again, what are we going to do? We're going to hop in for that long position. We put our short right over here, and then we aim for that, you know, that 1 to 3. In this case, it doesn't work. We get tapped out. So we have to remember that this isn't always a foolproof plan. We're not always going to win every trade, but what you can see here is you have to basically make sure that when it touches here, the number one rule is it has to be close. It has to be close to the line, and you have to put your stop loss roughly at the latest breakout. If it's all the way up here, that means you're going to have a massive stop loss like we saw before, and you're only going to get a 0.75. So 2, never trade anything under a 1-to-1 risk to reward ratio. And thirdly, make sure that when you are trading, you are ready for a loss, because it's not always going to work out extremely well. So let's go off and have another look at a different example. For example, here we can quite clearly see there is support and resistance. Now this is going to be the exact same thing. Say we were catching it live, we can go, okay, well we've already had one bottom, we're coming for a second bottom right here, just like the other one. And then we say, oh, okay, let's go for a long then. And I'm going to put it at the latest breakout. Now, this one's going to be quite large, unfortunately. So that means we are aiming for that 1-to-1. Now, we know that it does, in fact, come up, but we have to wait a while, all the way until this candlestick over here, for it to touch that line specifically. But that's all right. You know, it is that 1-to-1. And if you did pull out a little bit earlier, say somewhere around here, that 0.99, in fact, where is that 0.1? So that's actually the 1-to-1. So you would have made it over here. And then again, you could have hopped in roughly on this one, aimed for that 1-to-1 perfectly. Once I get my stop loss correct, right where the candlestick ends, and then go for that 1-to-1, which is roughly around, we'll say it's roughly around there. And again, you're going to make it. But, you know, eventually it is going to happen where we hop in at some point. That would have been an amazing trade because, look, we would have made it all the way up there. But the exact same thing can happen when it falls down, guys. So it's a really, really simple strategy, but it's something that you can definitely monetize and make some serious cash from. So hopefully that makes sense to all of you. If not, I'm sure you can leave a comment in the comment section and we can get back to you as soon as possible. Until then, guys, stay safe and have a great day.